In the past year, the price of coffee has more than doubled. Arabica beans are trading today at $2.77.6 a pound. Over the past 5 years, the price has risen by more than 160%. So where do we go from here in this and the rest of the world's soft commodities? Well, our next guest is an expert. Coast Sullenger joins us now from Geneva. He is a fund manager at Gaia Capital Advisors. Coast, good to see you. So is this incredible run, this rally in soft commodities set to continue?
You know, in the short term, it's all about weather, and that I have to say I cannot tell you much more than what we see in the news. But I think what we have to also look at are the longer-term structural issues. That demand is increasing, has been increasing at record rates over the last 5 years. If you look at just an example, I mean, animal feed demand in China has been growing by 18% per annum in the last 5 years. It just shows the effect to which consumers in emerging countries are shifting their diets. You couple that with population growth, we're going to 9 billion in the next 30 years or so. That's a massive stress on the current capacities to produce food. And so, indeed, I think that structurally we're going to keep going higher, not in a straight line, because weather is going to play a big impact in all of that.
How about production? How does the world increase production in order to keep up with this surging demand?
Well, it's all about arable land under production and harvest yield. And the big issue structurally is that harvest yields have plateaued in many regions due to over-intensive agricultural practices, pumping too much nitrates into the soil, et cetera. And if you look at places like China, you see that the harvest yields are actually rolling over. The growth in harvest yields is slowing and even rolling over. So that's very concerning. And that's one of the reasons that we have corn today at such a critical level. You know, corn is really in a very, very tight supply and demand configuration. It's the stocks are 15% of consumption, which is really a record low. So that's also a big issue.
What about technology? What kind of role can technology play here?
Well, hopefully a bigger role. There are lots of technologies, you know, from the advent of mini-till, no-till farming, which is cutting down on costs and making let's say, harvesting more efficient. That was incidentally developed in Latin America. To technologies having to do with storage. We now see the silo bags, which are being used, which help to de-bottleneck at harvest time, where you don't have to ship everything to the silos. You can basically store on the field. So there is a great amount of technology, but unfortunately, some of the hopes we had and some of the technologies in seeding and other areas that Monsanto and others had been striving for were somewhat disappointing in the last few years. And so that's why those harvest yields continue to be rather lagging.
Your fund is dedicated to making money off of these commodity prices. You're invested in places like the Ukraine. Tell us where investors should put their money going forward. Which companies are you looking at? I know you specifically invest in equities.
Yeah, that's correct. We do not either invest or condone investment in underlying grains, futures or physicals. We think that has a lot of issues, including regulatory risk, including even ethical issues. But you're right that we obviously do benefit from this higher soft commodity environment. We're more looking for companies which generate indigenous growth. We're looking at areas where we can have where there's low-hanging fruit in terms of increased potential and harvest yield. So there I do point to Ukraine, that the country which, despite its incredible soil quality and great harvesting conditions, is still producing today around 2.5 tons per hectare, whereas the European average is around 7 tons per hectare. So we see a tremendous growth in harvest yields driven by farm commercialization. That's large-scale commercial farming in places like Ukraine, in Africa. We have investments in farming companies in China as well. So these are the emerging regions where we see the best growth potential in that space.
Coast Sullenger of Gaia, thanks very much for joining us.